Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. Today probably both videos will be on the Forex market, because on the gold market we mostly have said everything in the beginning of the week. So in the gold market price stands in the triangle consolidation on the daily chart. It has chance to be broken today. The non-farm payroll is so that's why we just could do nothing but just wait when this will happen, and that's why maybe it will be more useful to take a look at some different forex markets, forex currencies. So first we will start from the Great British Pound and take a result of the recent Bank of England statement. So you can see here we've got some clarity on the daily charts. Was really fast drop yesterday, and daily chart lets us to estimate the nearest target of the possible action here. It stands approximately at 129.30 area. So you can see we could get the butterfly pattern could be formed here as 127 extension of the butterfly coincides with the 618 target of major daily pattern of this A, B, C top minor 618 extension. When the minor 618 extension stands below the lows of the B point, it means it happens every time when there's retracement less than the 618 level. It puts under the hazard of breakout of these lows because targets stand below them. And market usually gravitates to complete the extension, complete the target. Taking in consideration this recent plunge and this tail closing on the daily charts, mostly this action has engulfed the previous, I don't know, maybe whole month of the trading. So starting from the beginning of the October, right now it's November, so 4 weeks of the action has been engulfed and erased by this recent drop. That's why very probable the market will continue to move lower. So market right now stands at some minor support area, but right below the market stands 29.95, 130 confidence support, daily oversold, and 2 extension targets. So probably this should be reached in maybe next week. It's 129.30, it's next destination point here. Now some words about this collapse that we saw. On the first glance, it contradicts to the logic because rate was increased and why the market has dropped. So it makes me think that 2 major points. First of all, the position for the rate increase and with this rally that we saw in the beginning of the week mostly was short term. So investors do not believe that this will lead to some cycle of the rate increasing. That's why the position for a rate increase was short term. And as soon as the event has happened, market and major participants who possessed their self for the rate increase starting to take profit and just closing the positions, and this collapsed. On this way down, probably some speculators have joined them and just push market lower. And that mostly confirms our thoughts on the Great British Pound, because previously we have discussed in our weekly researches the Fathom Consulting analysis. They make forecasts and researches for United Kingdom economy and for Bank of England policy very often, and they predict very well this their events. And because actually this is the English consulting agency, and they said that the current circumstances with the inflation around 3% in the United Kingdom is mostly suggest the rate increase, but this will not lead to the cycle, full cycle as in the case of the United States. They will increase the rate maybe maybe twice, 1-2 times, not more, just to hold the current inflation, and this will be mostly tactical rise in rate. Because overall economy background and sentiment and confidence indicators shows weakness, and they are dropping. That's why it means that the United Kingdom economy right now is slowing, and rate increase will be probably temporal. And with this drop recently, guys, beyond of the maybe short-term analysis of the market mechanics, we see indeed that investors probably also do not believe that this will lead to a significant cycle, because if it will be really the cycle of rate increasing, and we're standing at the edge of the hawkish policy by the Bank of England that could last for a year, for example, as the Fed Reserve, hardly we could solve this drop. Probably this upward action should continue in this case, but that just confirms mostly the bets on this event was very, very short term, just on the event, and not on the some fundamental background of this issue. So on daily chart, we have estimated that probably we could go here. Now, what we have on intraday charts. On intraday charts, guys, our recent analysis was mostly correct, because take a look, market has turned down, returned back inside of the triangle. So using of the stop entry order somewhere in the middle of the triangle, as was suggested, probably should bring you some profit, but as you can see, it was not really very tremendous. So yes, it was some downward action, but it's not very significant. Still, this is a positive result. At the same time, placing of the breakout of the 618 resistance that we see here, and as we said, this probably could be triggered in case of the upward action. So it hasn't been tested, it hasn't been even touched. So that's why, as you can see, entry stop order technique is a very useful tool that you could use when you expect significant volatility, but you do not know the direction, you do not know the result of the event. And placing stop entry orders on the important key levels that should be broken by this volatility in one case, and in the other, very often could give you a very good result, because the one order will be triggered while another one will not. So I very often use this technique in such circumstances. So what we have right now, after this collapse that we see on the intraday charts as well, we have minor ABCD pattern has been completed. Our triangle consolidation has been broken down, and market right now stands at the support. So this first support is the weekly pivot support 1 around the previous lows. On the daily chart, you can see that's also an area around the monthly pivot support 1. So currently, guys, most probable that within a few hours we could get some retracement, because market probably will be waiting for non-farm payrolls release. But hardly this retracement will be significant, because market is not yet ever sold. Drop is really significant, and as you can see, we can't treat it as some failure breakout, some failure drop, because market has dropped and just stay here. So no fast acceleration we see, no some kind of backward action we see. So market just stands around the area where it stopped yesterday. That's why I have planned these levels here, guys, 131.30, 131.85, this recent drop. Problem on non-farm payrolls volatility, maybe someone will be hit, but it also could happen that market will show just minor retracement, retraced the triangle body, retraced the border of the triangle, and turn down again. It also could happen. So that's what we see right now on the Great British Pound. So we could watch for some minor retracement here. But again, today's will be a bit tricky moment. That's non-farm payrolls really should stand. But my suggestion is that we could get the positive surprise, just because of the normalization of the situation in the southern states as a relief and reestablishing after the hurricane events that was last month. That could give more numbers in the non-farm payrolls release. But this is just my suggestion. I do not know definitely what will happen. So let's see how situation will turn on the cable today.